Dreaming of working with ocean views and exploring historical cities on your downtime? Portugal might be calling your name. Welcome back to $1 Insights. Today, we're diving into Portugal's digital nomad visa and what it means for your taxes. Let's get started. The country offers two types of nomad visas: the temporary nomad visa and the residency nomad visa, catering to remote workers and freelancers from outside the European Union and European Economic Area. The residency nomad visa is issued for an initial period of 120 days and is then converted into a residence permit upon entry. Temporary nomad visa, issued for 91 to 356 days, cannot be extended or converted to a residence permit. But before you pack your bags, let's unpack the essentials. From visa fees to income requirements, we've got you covered. Visa details and requirements. Visa fees are €75 for the temporary nomad visa and €90 for the residency nomad visa. Applying for either visa requires meeting specific criteria, including proof of stable monthly income, 4 times the Portuguese minimum wage, roughly €3,280. The applicant must continue to remain employed abroad. Here are the standard requirements for the digital nomad, remote work visa. Application form. Proof of average required monthly income for the past 3 months. Proof of employment or self-employment. Passport valid for 3 months beyond the intended duration of stay. Proof of immigration status if not a citizen of the country of residence. Return ticket/transport document. 2 passport-sized photos. Valid travel or health insurance. Proof of accommodation. A form authorizing access to the Portuguese criminal record as maintained by the Immigration and Borders Service, SEF. A certificate of tax residency may also be required. Also, a criminal record is required from the country of residence and every country the applicant has resided in for over a year. Minors under 16 years are exempt from the criminal record requirement. The applicant is required to provide proof of employment, at least one of the following: contract of employment, promise of contract of employment, proof of employment relationship via employer statement. If self-employment, the applicant will need to provide at least one of the following: articles of association, contract or proposal for contract regarding provision of services, document showing services to one or more entities. Taxation for digital nomads in Portugal. Now, let's simplify the tax situation for digital nomads, including those from the US and other expats. Staying in Portugal over 183 days, plus if you have an official residence and domicile in Portugal, could make you a tax resident. Understanding your tax obligations is crucial, whether it's income tax or Social Security contributions. Until January 1st, 2024, Portugal offered a favorable tax incentive for digital nomads and foreigners living in the country through the Non-Habitual Resident (NHR) Program. This program has undergone changes and no longer includes digital nomads under the new regime. However, individuals who were already enrolled in the NHR program or had initiated their relocation process to Portugal, such as applying for the digital nomad visa before January 1st, 2024, will still be eligible for the program's tax benefits. This ensures that those who planned their move under the previous guidelines can still enjoy the favorable tax rates initially promised. With the end of the NHR program and the special tax rates, digital nomads will be subjected to normal residence tax rates. In Portugal, the residence income tax rates range between 14.5% and 48%. Your individual tax rate will depend on the amount of income you earned in a single year and if you are married. For example, those earning between €15,922 and €20,700 will have a tax rate of 28.5%. You must file your taxes in Portugal each year. If you're working as a self-employed individual as a resident in Portugal, paying taxes looks a little different. Instead of paying one lump sum once a year, you will pay quarterly taxes on your projected income for the year. To file your taxes, you will need to acquire an NIF number. This is an identification number the Portuguese authorities associate with individuals when paying taxes. U.S. expats and tax forms explanation. For U.S. expats, it's crucial to remember that the IRS requires all U.S. citizens to report their worldwide income if it meets the IRS's filing threshold, regardless of where they live. Failure to do so can result in severe penalties, including fines and legal consequences. Be aware that filing U.S. taxes as an expat involves more than one form. It also includes such forms as FBAR, Foreign Bank Account Report required if you have over $10,000 in foreign bank accounts at any time during the year. This form helps the IRS identify potential unreported income generated from these accounts. Form 2555, Foreign Earned Income Exclusion, allows qualifying expats to exclude a certain amount of their foreign earnings from U.S. taxable income, potentially reducing their U.S. tax liability. Form 1116, Foreign Tax Credit, offers a credit for taxes paid to a foreign government, preventing double taxation on the same income by the U.S. and the host country. Understanding and correctly utilizing these forms can significantly impact an expat's tax strategy, potentially saving thousands in unnecessary tax payments. How passive income is taxed in Portugal. In Portugal, passive income can be classified mainly into two types: investment income and capital gains. Investment income includes dividends and interest from your capital investments. Under the Non-Habitual Resident (NHR) program, this type of income from foreign sources might be exempt from taxation in Portugal, provided it's potentially taxed in the originating country. This is due to Portugal's tax treaties with other countries, including the USA, which may allow for such income to be taxed in the investor's home country. Without the NHR status, a flat tax rate of 28% applies to investment income in Portugal. However, taxpayers have the option to aggregate this income with their other income, subjecting it to progressive tax rates ranging from 14.5% to 48%. Capital gains result from selling assets at a higher price than their purchase price. This category includes profits from the sale of stocks, real estate, and other securities. For residents, capital gains are generally taxed at a flat rate of 28%. Like investment income, you can choose to include these gains in your overall taxable income, potentially affecting the tax rate applied. The Non-Habitual Resident program may offer specific exemptions, particularly for gains from the sale of foreign real estate, where the property is taxed in its location country. Without NHR benefits, capital gains are taxed at the standard 28% rate, though tax credits for taxes paid in other countries may apply. Social Security contributions. The approach to Social Security contributions for self-employed individuals in Portugal has recently changed, providing notable incentives for newcomers. Initially, during your first year, you'll enjoy a 0% Social Security rate on your income, providing a financial breather as you settle in. Once this period lapses, 70% of your income becomes subject to Social Security taxes at a rate of 21.4%. Solo entrepreneurs can benefit from a 25% reduction in this rate, although opting for this decrease means your coverage shifts to the compulsory protection scheme, offering a narrower safety net compared to the broader scheme. For a practical perspective, consider you're earning €10,000. The calculation for your Social Security would be as follows. €10,000 multiplied by 70% multiplied by 21.4% multiplied by 75% equals €1,123.50. This formula becomes crucial for managing your self-employment taxes effectively. It's also important to note that, regardless of your company's income levels, a minimum monthly contribution of €20 is mandatory. The range of professions qualifying for these rates is broad, encapsulating most skilled professions, including various specialists across different sectors and individuals in the arts and sciences. Given that the qualifying professions list is subject to updates, staying informed through regular checks is advisable. For those already contributing to Social Security in another EU country, or a country that Portugal has a bilateral Social Security agreement with, exemptions are available. EU citizens can easily prove their existing coverage by obtaining the A1 form from their home country's Social Security Authority. Non-EU citizens, meanwhile, will find that a local certificate of coverage suffices for Portuguese authorities. Ready to make Portugal your office? Remember, the key to a seamless transition is preparation. For more insights into the digital nomad lifestyle and navigating the world of finance, subscribe to $1 Insights.